Thank you for joining the first installment of Digital Crossfire 2015, the electronic version of the annual Realtors in the Crossfire program from your New Hampshire Realtors Legal Committee and Risk Management Subcommittee. Digital Crossfire is an interactive workshop designed to improve your risk management awareness regarding hot-button real estate issues, including this installment on the subject of Errors and Omissions insurance. Introducing Matt Johnson and Bruce Aydt.
Hi, I'm Matt Johnson. I am Counsel to the New Hampshire Association of Realtors. I'm here coming to you from the Professional Standards Workshop. This is a continuing segment of our Digital Crossfire series. Today we are pleased to have a special guest with us, Bruce Aydt. He is the Senior Vice President and General Counsel for Berkshire Hathaway Home Services Alliance Real Estate located in St. Louis, Missouri. He is also a nationally recognized real estate educator and has been doing so for 25 years. Today our topic is going to be the basics of errors and omissions insurance. Bruce, in a nutshell, what is errors and omissions insurance?
Well, and I always direct people pretty much to what's the name. The name is errors and omissions, so it covers you in your professional real estate services for things like negligent acts or errors that you've done, as opposed to intentional acts which are not covered. So it's matters of negligence, matters of a failure of professional real estate services.
Thanks. And just to be clear for the New Hampshire audience, New Hampshire does not require agents or brokers to carry errors and omissions insurance. So, Bruce, I would ask you the question, why should agents and brokers consider having this insurance?
Well, there's several different theories about whether you should or shouldn't, and if you have insurance, will you in fact have more exposure? But you have to consider that if you don't have the insurance, then your personal assets are at risk. And it's likely that if anybody ever were to sue you for a substantial amount of money, that you will, and they won, then you're going to have a very serious financial issue continuing your firm.
And are there types of claims that you see that are disputes that insurance typically covers?
Yeah, the ones that you see the most are property disclosure issues. And following that, I guess I'd say fiduciary duty issues and agency issues. But just about every one includes some kind of property disclosure issues. So those are the ones that are the real key.
Okay, and are there, the flip side of that, are there types of disputes or issues that are typically not covered by insurance?
Yes, there are. Things like antitrust issues oftentimes are not covered. Sometimes you'll have a policy that has no environmental coverage, no discrimination coverage, and so you really have to carefully look at your policy to see what is and what is not covered, and when you get the bids, what is and what's not covered in the bid.
And last question, what is a deductible when you hear that, and how does that work?
Okay, a deductible is the amount that you would be responsible for paying usually before the insurance company's obligation kicks in, so to speak. And you can look at deductibles anywhere from usually $2,500 to over $10,000. I would say that recently insurance companies are looking to higher and higher deductibles.
Thank you.